Want to know the best stocks under $30 to run the wheel strategy in September? I got you covered. In this video, I'm going to go over 4 stocks that I believe are strong candidates for anyone with a small account just getting started, or even if you're an experienced options trader. Let's go. Hi, my name is Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. So with that said, let's jump in and get started. My first pick is Lyft. So Lyft is finally out of Uber's shadows with the company posting a strong second quarter performance, 40.3 million in profit compared to just 5 million a year ago, with gross bookings up 12% and rides up 14%. Ridership also reached 235 million trips. Just today, they also launched a robotaxi service in Atlanta with May Mobility, a major step in autonomous mobility. Plus, their CEO, David Risher, recently purchased about 100K in stock, showing personal confidence in the company's direction. So looking at their 1-year chart, they're up about 68%, so looking pretty good. And then looking at the year-to-date chart, they're up about 47%. In addition to that, Lyft made a new 52-week high of 1935 just today, September 10th. So I certainly like the chart as well as the company. It currently has a PE ratio of 82. Again, normal for growth companies to have high PE ratios, so we're okay there. Coming down to additional financials, it's been beating earnings per share quarter over quarter, so looking good there. Looking at revenue and earnings, we have these solid blue bars, and then revenue staying pretty stable in the 1.5 billion territory. Looking at analyst recommendations, we have a lot of holds and then some buys and strong buy. Looking at 1-year price targets, so the average price target is 1712, but Lyft's currently trading at 1896. On the high side, we have $28, so there's certainly room on the upside for Lyft. So I have the Lyft 6-month chart pulled up right here, and as you can see, Lyft is currently at the very top of its Bollinger Band. For those not familiar with the Bollinger Band, generally speaking, 95% of the time, the stock generally trades in between the Bollinger Bands. In instances where it jumps out of the Bollinger Band, it quickly reverts back. We can look at one instance back right after earnings back in May where Lyft jumped out of the Bollinger Band, but then as you can see in the days to follow, it quickly reverted back in. Given that it's at the top of its Bollinger Band right now, obviously, nothing's guaranteed in the stock market, and Lyft could continue to move upward and the Bollinger Bands can continue to expand. But knowing that the stock generally reverts back, I see some support levels right here at the middle of the Bollinger Band, which is this 1650 level. So if I were to build a position into Lyft, I like the middle of this Bollinger Band. So let's pull up the options chain and see what kind of a delta that is. And I'm going to go out 30 days to the October 10th options chain. And the 1650 is actually a delta of 11. When I sell put options, I generally like to target a delta of anywhere from 15 to 20. And all that means is that there is a 15% or a 20% chance of the stock getting to that price level. So keeping that in mind, we could go slightly higher to the next strike price, which is 17. So if you sell puts on the $17 strike price, you can collect a premium of about 30 cents right now. Or if you want to go a little aggressive, you could go with the 25 delta. And going with the 25 delta, you would sell puts at the 17.5 strike price. And then if you click on the bid, you could probably get your order filled with the mid price, which is 44 cents. And simply that means that you would collect $44 for selling one put option on the 17.5 strike price. And that would give you about a 2.58% return on your capital. Next up is SoFi Technologies. And SoFi is a fintech disruptor and one of my favorite stocks to trade currently in the stock market. They crushed Q2 expectations with an adjusted earnings per share of 8 cents, beating estimates by a whopping 33%, and revenue coming in at 858 million, up 43% year over year. Now, keeping in mind that there's a 90% chance of an interest rate coming up in the next Fed meeting next week on September 17th, that is set to benefit SoFi immensely, as a majority of SoFi's business is focused on consumer loans, student loans refinancing, and even mortgage loans. I recently did a detailed video on SoFi and why I believe it's a breakout stock for the rest of 2025. Click on the link to check that out. Looking at SoFi's 1 year chart, it's up a whopping 262%. And then looking at its year-to-date chart, it's up about 66%. Also recently making a new 52-week high of 2685. And looking at where it's currently trading, it's still trading pretty close to its 52-week high, ending the day today at 2552. Currently, it has a PE ratio of 51, again, fairly decent for a growing fintech disruptor. And then looking at earnings per share, it's been beating earnings per share consistently quarter over quarter. And then revenue has been increasing steadily, and so has the earnings. Looking at analyst recommendations, we have a mix of hold, buys, and some strong buys. And then looking at 1 year price targets, the average price target is actually $21. With SoFi trading around 25.52, I definitely believe that it will get to $30. I'm not sure exactly how quickly it'll get there, but I certainly believe in the stock and the company and their business model. I certainly think that we will see SoFi hit $30 hopefully before the end of this year. Looking at SoFi's 6-month chart, it's currently trading in between the top and the middle of the Bollinger Band. So the next level of support that I like for SoFi is actually the bottom of the Bollinger Band, which is around 2270. This also coincides with the 50-day moving average, which is this blue line right here. So I actually have a 22.5 strike price position open on SoFi currently. I sold 10 puts of the 22.5 strike price expiring September 26th. And for that, I collected a premium of about $500. So as you can see, it's currently up about 46%. So if I would like to close this position, I could easily close it. But since I really like the 22.5 strike price, it's at the bottom of the Bollinger Band. I'd be actually happy to get assigned at that strike price. So that is why I'm not closing this position just yet. But if I were to open a new position into SoFi, let's pull up the options chain and see how it's looking. I'm going to go out 30 days to the October 10th options chain. And then again, the 22.5 strike price, the 22.5 strike price, the position that I have open at the moment is actually a delta of 19. So if you sold puts at the 22.5 strike price, you would receive about 51 cents in premium or $51 per options contract. And that would be a return of about 2.3% on your capital. Alternatively, if you really like SoFi and don't mind going a little aggressive, I also like the $23 strike price. As you can see, there's actually a lot of open interest and volume at the $23 strike price. So if I were to open a new position based on today's pricing, I actually like the $23 strike price. And for this, if I click on the bid, right now you can get this order filled at 63 cents per options contract, or basically 0.63 times 100, because one options contract lets you control 100 shares. So you would collect $63. If you sold one put option at the $23 strike price, that would give you a return of about 2.8% on your cap. And then all you would need for SoFi to do is stay above the 23 strike price by expiration, and then you get to pocket 100% of this premium. In case SoFi does get down to $23 in about a month, and if you do get assigned at the $23 strike price, it would be a fantastic level to own some shares and ride SoFi back to all-time highs. My next pick is Applied Digital Corporation, ticker symbol APLD. And APLD is in the business of building and operating data centers, mostly geared towards the AI sector. In fact, NVIDIA owns about a 3% stake in this company. APLD recently signed a 250 megawatt AI data center lease with CoreWeave, and also are breaking ground on a $3 billion AI campus in North Dakota this September. Now, Applied Digital is not profitable just yet, but looking at their chart, they're up 163% in the past 1 year. And then year to date, they're up 122%. APLD is currently trading at 1698, which is very close to its 52-week high of 1760. And it's been beating its earning per share estimates quarter over quarter. And then obviously we can see here that it's not profitable. Looking at analyst recommendations, we have a lot of green, meaning buys and strong buys. And looking at 1 year price targets, it's currently trading at 1698. With the average price target of $20. And then we have a $24 price target on the high end. So there's definitely still a lot of room to run. Looking at APLD's 6-month chart, it's currently at the top of its Bollinger Band. And knowing that it's a very volatile stock, if I were to build a position into Applied Digital, I would target somewhere in between the middle and the bottom of the Bollinger Band. We have the middle of the Bollinger at 1534, and we have the bottom of the Bollinger Band at 1344. So let's look at the options chain and what kind of premiums we can get. Again, I'm going to the October 10th options chain. And then if I look at 20 delta, that would be the $14 strike price. And that would actually give you a return of about 5.42% on your investment. Now, knowing that it's a highly volatile stock, and it actually has an implied volatility of almost 102%, which is fantastic because the higher the implied volatility, the better the premiums that you get on a stock. So keeping the high volatility in mind, if you go with the 17 delta right here, meaning that there's a 17% chance of the stock getting to this strike price in about a month, then you're getting a premium of about $52, and that's actually a return of about 4.01% on your capital. So depending on your risk level, I would go either with the $14 strike price, which is a 21 delta, and then that gives you a 5.4% return on your capital, or you could sell puts at the 13.5 strike price, which is a 17 delta, but still gives you a 4% return on your capital. Last but not least, my final pick is Rocket Companies, ticker symbol RKT. And for those not familiar with Rocket Companies is in the business of home loans and refinancing home loans. So again, with the potential rate cuts that are expected next week, this is another stock that is likely to get a big boost, as there is a high possibility that with interest rates expected to be lower in the upcoming months, we will see a resurgence in the real estate sector with more people buying homes and refinancing their loans. Looking at their Q2 revenue, their Q2 was solid where they posted 1.3 billion in adjusted revenue, exceeding guidance with adjusted net income of 75 million and an EBITDA of 172 million. On the strategic front, Rocket is rapidly expanding, recently acquiring Mr. Cooper for $9.4 billion and earlier Redfin for $1.75 billion. Looking at their 1 year chart, they're up about 10.8%. But if you look at the year-to-date chart, they're up almost 86%. In fact, recently making a 52-week high of 2208, and the stock's trading at $20.90 at present. If you look at earnings per share, they've been beating earnings per share consistently, and the revenue and earnings have been fairly stable. Looking at analyst recommendations, we have a lot of holds on this stock. But looking at 1 year analyst price targets, we have an average price target of 1742. The stock's currently trading at $20.90, mostly on the enthusiasm surrounding the recent merger with Mr. Cooper and the upcoming interest rate cuts. If we look at Rocket's 6-month chart, it's currently at the top of its Bollinger Band, again making a new high of 2208 today, but ending the day at around $20.90. So if I were to build a new position into Rocket, I easily like the middle of the Bollinger Band right now, which is around $18.70. So I'm going to go out again to the October 10th options chain, 30 days out. And then since we don't have a 18.7 strike price, we have a 18.5 strike price, which is a delta of 25. That's lower than the 18.7 strike price, which is the middle of the Bollinger Band. I like the 18.5 strike price. And then again, if I click on the bid, right now I can collect a premium of about $69 by selling puts at the 18.5 strike price. And that is a return of about 3.87% on your capital just going 30 days out. So that's it for this video. If you enjoyed it or learned anything useful, don't forget to hit that like button, subscribe to my channel, and comment down below with your thoughts or questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.